What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Wednesday, May 22nd. All right, guys, Nvidia stock here today, the day before earnings, which are, of course, tomorrow, Wednesday. We're up $6.06 per share. That's plus 0.64% in regular trading hours. I don't know, flat, maybe down a little bit, 50 cents or so. After hours. Either way, take that with a grain of salt, guys. Volume in the after hours is very, very low. At least today it is. Tomorrow is going to be a little bit of a different story. But take that after hours movement with a grain of salt. Let's take a look at Nvidia. Of course, tomorrow we have earnings. Now, even though Nvidia is a daily upload, I cover it every day. I hope to see you subscribe to the channel, by the way. I greatly appreciate it. It helps out a lot. I'll keep the videos coming. Even though that is the case, this is the last you'll hear from me before earnings are released. So the expectations tomorrow, at least the, I would say, most heavily looked at sources, the average of them. The expectations, EPS, 5.58. Revenue, 24.59 billion. That will vary slightly, especially the revenue expectation, depending on where you look. Okay, that's okay. It should all be pretty close. But listen here, let's take a look at this thing and get the absolute best feel that we possibly can heading into tomorrow, everything that the market was willing to give us here. We're going to start, of course, with looking at directional bias and the volume profile. We'll look at the psychological levels that we're going to need to be aware of. There's a ton of money watching those, especially tomorrow. Implied volatility, very important for those of you trading options right now or looking to do so in the near future. We'll look at the expected move. Fair warning, there is a lot of volatility being priced in by the market heading into earnings. And then finally, the directional bias coming from the chain. So let's get started here on the 5-minute chart, just quickly trying to pull out any directional bias that we can out of the volume profile. So let's take a peek under the hood. You can see we got that sell-off in the pre-market and then spent pretty much the rest of the day recovering with a period of consolidation in the afternoon. Now, what we get here is a pretty contextual open, actually. Volume was high on the opening bar, and then it faded quickly. We get a couple of red pops here. That's very normal. As we move on through the day here, what I thought was interesting, guys, is again, the name of the game here on the volume profile is context. We saw volume hang on a little bit deeper into the day than is normal. Normally, we'd see a fade, and it would continue through and kind of chop the head off of at least those two bars through this period. Okay, now given these two, again, those are more contextual than these, realistically, because we expect those later bars to be lower. If anything, even when you take these and cancel this out from these, I'm comfortable assigning a very small amount of bullish bias at that period of the day. Okay, but that's it. It's really not substantial or tremendous, I should say, at all. Moving through here, we get a little bit of a pop here. Again, 2 consecutive out of context bars. That is like the minimum amount I'm ever willing to assign bias on. 1 bar is never good enough because we'd be here all day if we were going to do each poppy bar that we got. But 2 is not much better, but I'm willing to assign a very small amount of bullish bias there. Moving through the day, as we head into the close, you see 5 out of context green bars with 1 like half out of context red bar. And it's even closer to the close, which is where we expect that increase in volume to start occurring. So it's even less out of context, especially than like this one in particular, and these 2. Okay. So again, I would assign a small amount of bullish bias into the close. Now, some of you might be confused looking at this big red bar. That's a rebalancing bar. You can see very little actual movement. That's triggered by algorithms. Upon the closing bell, a lot of buying and selling. I tend to ignore the rebalancing bar. So listen, a very small amount of bullish bias here in the volume profile today. Again, if I don't remain unbiased completely here, then what are we doing? Right, let's move on. Let's take a look at the arguably much more simple and very, very effective and important psychological self-fulfilling prophecy levels. This is the 30-minute. We'll also look at the 4-hour and the daily. And on all of them, you'll notice I have a white line and a gray line. That's the 50 period and the 200 period, respectively. Some of, if not the most popular indicators you could ever slap on a chart on very popular time frames. It's all about the psychology. I want a big sample size of eyeballs watching what we're looking at. Now, you guys remember here yesterday, we were talking about how Nvidia had kind of popped and reclaimed that 50 period yesterday and kind of pulled away. That was good to see. This morning in pre-market, we tanked off on very low volume, slightly higher than average for pre-market standards, but still very low. We got near the 200, never quite tested it, and immediately popped back up. We actually tested it on that wick and rejected off the 50 period and ripped upside through, retested the 50 a couple of times, and pulled higher into the close. Okay, so it was, listen, today's movement, as far as the 30-minute is concerned, a little bit sloppy, perhaps giving us a little bit of anxiety, but it worked out. We're above both. So tomorrow, what I'm looking at through the day, heading into, of course, earnings, I want to see any retest of that 50 period from a bullish perspective. I want to see that hold as support. So I don't care if we test it on low volume, high volume, whatever, as long as we bounce on higher volume than the test. Bears, here's what you guys want to see. Rip downside through the 50 on high volume. No problem on the rip through. Low volume retest, small sample size betting on the breakback upside, high volume rejection. That would create just an additional potential psychological barrier back to the upside heading into earnings, which is not a bad thing to have. Okay, and could also set you guys up for a downside test of the 200 period. But of course, we're going to have fundamental repricing going on once earnings hit. It's one of the exceptions to the kind of like rule that I always talk about, where in the mid and long term, fundamentals always take over. But in the short term, it's all psychology. But when you get an earnings event, you get fundamental repricing, happens very quickly, and psychology at play at the same time. Okay? Now, let's move on here to the 4-hour chart and take a look. You guys can see, we're probably not going to spend a whole heck of a lot of time here, but it's important to be aware of this because we're going to have a volatility event tomorrow. We're about 3.4% away from the nearest relevant level on the 4-hour, which is that 50 period. Listen, if it comes back into play, I'm going to be watching it, especially in the after hours if it comes into play, as a potential level of very high interest. Of course, bulls, you'd want to see that hold. Bears, you'd want to see that break. But aside from that, bulls, since we're currently above it, this is kind of like your chart here, is what we're looking at. Bulls, I would want to see that the 50 period on the 4-hour, just moving higher, reclaiming as many whole dollars as we possibly can, as quickly as we possibly can, just adding an additional ascending psychological potential barrier back to the downside. Okay, we want as many of those as possible, ideally across time frames, right? The 4-hour, that thing getting higher and higher and higher, getting some additional feet up underneath this recent move higher we've had on Nvidia, not a bad thing. But that being said, let's move on to the daily, because the daily is the most important chart, and it also has the most eyeballs, making it even more important. Now, you guys remember yesterday we were talking a lot about 950, because we've known that from $900 a share to 1,000, there were really only two potential areas of interest: 950 and the all-time high at 974. Aside from that, guys, $1,000 a share is so stupid obvious that it just trumps everything else in terms of psychological importance. But 950 proved to be a hang-up these last few days. Today, even with just a $6 green day, we were able to get up and hold 950, above 950 into the close. So tomorrow, during the intraday session, bulls, holding 950, I think would be a pretty great power move. Now listen, guys, if we could push all-time highs before close, that shows a level of confidence that, is just different. Okay, that would be very interesting. Above 974 into the close would be a very interesting scenario. That doesn't render the stock 100% safe, by the way, because the fundamental repricing, we unfortunately, we don't have early leaks of earnings, like some people may. But just in terms of pre-earnings confidence, that would be a very interesting scenario. But just a hold of 950, I'd be happy with that into the close, because that has proven to be a level in these last 4 days that we've struggled with. Bears. Breakdown. First of all, any test of all-time highs, you want to reject that. You don't really want that confidence heading into the close tomorrow. On top of that, holding 950, getting back below it and holding 950 as resistance would be a great thing. And then on top of that, you're about 5.5% away from $900 a share. just getting as close to that area as possible would be a great thing if you're a bear intraday. That's a volatile day, okay? But just so we're kind of covering all angles here, that would be great because bear is the ultimate goal, similar to like the bull's ultimate goal is getting above 1,000. Bear is your ultimate goal is to get back below the 50-day moving average here on the daily, which is currently at 885.79. Now, implied volatility, especially important for those of you trading options on this earnings event, is actually down. This is really interesting. It's actually down a little bit today. So in comparison to the last week, it's actually low. In comparison to the last month, it's kind of flat. And in comparison to the last 3 months, it's kind of in the mid-range. Now that's really interesting because typically IV tends to pump heading into earnings, which renders a lot of options bets kind of subject to a high potential risk of IV crush. That's not quite as high here, but beware. If you're buying options heading into earnings, be aware that the default response to earnings is that IV tanks after the event. Why? Because options traders, I mean, fundamentally, they have no more reason once the catalyst is done to continue pricing in the catalyst's expected or higher expected volatility, right? Coming from that earnings report. So it tends to plummet. So by buying options heading into earnings, you need to understand that in doing so, you're not only making a directional bet, you are also willingly saying, I think I can outrun not only theta, but time decay. I think I can also outrun the probability of IV crush, which does happen the majority of the time, not every time, but the majority of the time. And I think I'm going to be directionally correct. Okay, so you have to get the volatility right, being likely higher than the market's expectation. So you not only have to be directionally correct, you have to be directionally correct enough to outrun time decay, which is higher on short-dated contracts especially, and you have to be directionally correct with the volatility in that direction being higher than what the market expected to make money. Now, when that happens to an extreme degree, is when options buyers make a lot of money. But understand that you're playing a game that you have to be right on more things than just direction, which a lot of people don't understand. They're playing a big boys game and they don't have an understanding of it, at least to the depth that needs to be understood. And that's when people get hurt. Okay, you want to position yourself, if you're going to trade this at all, you want to position yourself with every opinion you have in your position. What do I mean by that? Well, you want your directional bias and you want whatever your volatility bias is in comparison to the markets to also be worked into your position. If that means you're selling options instead of buying them because maybe you think volatility is going to be lower than what's expected, but you still have a directional bias, you're not out of luck. You can still take a position. You just might have to use a spread or sell options rather than buying them. Okay, but if you're like, well, I have a really strong directional bias and I think the volatility is going to be higher than what the market expects, which we'll talk about in a split second here, and I think I can outrun the theta decay, okay, well then maybe buying options is your best bet. There's nothing wrong with that if that's truly your opinion, right? All well-rounded into, okay, looks like I should be buying options, right? If that's your position, the position that works best for your opinions, then that's what you can think about doing. Okay, now expected move, which is the volatility expectation that we just talked about, the baseline market expectation. So unfortunately on Nvidia, we do not have daily expirations. So we have to do a little bit of math and a little bit of educated guesswork to really try to nail this. All right, now, the expected move by Friday's close, May 24th, compared to today's close, is plus or minus $78.29 per share. Okay, understand, guys, that if we take the closing price of today, that is pricing in a 1 standard deviation expected move, putting Nvidia at either, by Friday's close, about $875.60, okay, or about $1,032 a share. So we're looking at the market's pricing in by Friday's close, either over $1,000 a share or below $900 a share. So here's what we can do. This gets a little sloppy because we have a lopsided volatility expectation for tomorrow, Thursday, and Friday, right? So let's think about this. What we would normally do is take 78.29, divide it by 3, because we have 3 trading days left in the week, divide it by 3, and then add back 50%, right? That gives us a plus or minus expectation by tomorrow's close, or it would, of $39.14 per share. But hang on, we're not done. This is based on close to close. The highest volatility expectation is actually Thursday, because earnings hit after hours on Wednesday, tomorrow, right? So that actually truly gets priced in on Thursday. So this is lopsided toward Thursday. Thursday is the largest volatility expectation. I would bet that tomorrow, Wednesday, is the second largest and by close, and Friday is the least out of the 3 trading days that we have left. Okay, so what I would look at here is that tomorrow's close is kind of up in the air. It's likely to be some waiting around for the earnings. But after hours, which then translates into like Thursday, I would say that after hours, guys, the market seems to be pricing in something like a $40 or $50 move from the current close, $953.86. You know, $40, $50, $60 worth of movement is what seems to be being priced in here by the market after hours during the earnings report, and then perhaps a little cherry on top by like Thursday's close, because of course the majority of the movement usually happens after hours, and then you see some chop the following day, and then it typically tends to either reverse or carry on. But that's a lot of movement. Now, that doesn't necessarily mean, you have to understand that the market's going to be right in expecting that. But, you know, if the market's kind of looking at tomorrow's after hours as like, okay, maybe 900 to 1,000 in terms of like the expected range and volatility, that kind of makes sense to me, because we're kind of right in the middle of that $900 to 1,000 range, and pressing either side of that after the earnings, I see why the market would start to price that in. And then of course you have Thursday, like during the day, and then Friday to get to that $78 of expected movement. I mean, again, guys, that puts us below 9 or above $1,000 a share by Friday's close. So the market is, you know, it's not 30% of movement, but we're talking about Nvidia here. That's a lot of movement for a stock of this size. So all that to say, get ready here for some volatility these next few days, because the market is pricing that in as it's coming. Okay, now, what I'm curious about is directional bias. Now, again, we're going to get more directional bias tomorrow, but you'll likely be hearing from me after earnings have already hit, based on how the schedule is worked out on the channel here. So here is the directional bias in the chain today as we head into tomorrow, Wednesday. We have over 500,000 contracts traded today, over 500,000. Of those, we have 335,000 calls and 238,000 puts. We're seeing a bit of a call side bias here, aren't we, today, as we head into tomorrow, Wednesday. But if we break that down by time frame, understand some of these bets are going to be for tomorrow and closed before earnings, but some of these bets also mixed in are likely to be held through earnings, and they're taking it a day early. The 0 to 20 delta range, the short-term speculators, we see that flip. 117,000 calls versus 135,000 puts. Now listen, it's a smaller bias to the bearish side than we're seeing to the bullish side on the overall. But it's interesting, it does flip to a very slight put side bias out of the short-term speculators here today, heading into tomorrow, Wednesday, while the overall call put ratio is still leaning to the bullish side. How does that happen? Well, you go here to like the slightly out of the money 21 to 40 compared to the very out of the money, the 0 to 20. Right, the 21 to 40 delta range leans bullish. The 41 to 60 delta range, which is the at the money, more like the more like the midterm outlook, at least on average in terms of expirations, you know, still call side heavy. 108,000 versus 47,000. And then as you get into the in the money and the deep in the money, like the 61 to 100 delta range, the volume goes down because they're more expensive. People buy less. But the ratio leans very, very bullish. And that's more like the long-term, mid to long-term outlook, at least on average. So listen, guys, every day I'm sending out my personal scalp setup alerts, in-play stock alerts, human verified by me, unusual options activity. That's how I keep track of what the whales are up to. And working with my Platinum one-on-one group. You can take a look at all that at our private community at the link in the pinned comment. I hope to see you join. That price is going up very soon here in the near future, but joining at that link, that'll allow you to get grandfathered in at that current rate for as long as you retain your membership. I'll see you inside. And hey, if you're getting value out of the daily Nvidia videos, please, the best thing you can do for the channel is just leave a like on the video and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.